Coming to you from Investor Town Hall's headquarters in sunny San Diego, I'm Daniel Wong. On today's program, we have the company behind the successful Reg A Plus offering of Elio Motors and its equity crowdfunding marketing campaign. Stay right there. We're talking about what investors need to know and what companies can do to stand out in this new fundraising frontier. CrowdfundX is a Los Angeles-based equity marketing agency, and CEO Darren Marble is here on the program to tell us more about his experience with Reg A Plus and bringing Elio Motors to market. Darren, thanks for taking time to talk with us. Now, at San Diego Startup Week, we really enjoyed the insight you gave there, and it was very interesting to hear you talk all about Regulation A+, what you did for Elio Motors and bring it to the capital markets. What do investors need to consider with these offerings, and can you kind of recap what we talked about there?
Absolutely. Look, I think that Elio Motors had a number of distinct advantages going into the Reg A offering. And it's largely based on the idea that they had done a very successful pre-order campaign. By the time they engaged us, they had about 40,000 pre-orders on their vehicles, which they had done direct to consumer through their website for a number of years. And so it's fair to say they had a very sizable built-in audience going into the campaign. And so what's interesting about this, I think offering is it has created the perception to the market that equity crowdfunding might be easy, when in fact, not a lot of people truly understand the momentum that Elio Motors had going into the campaign. And I think the biggest takeaway for any issuer considering a Reg A Plus offering is that they really need to think carefully about how they're going to mitigate risk from a marketing perspective. At the end of the day, these campaigns come down to marketing and distribution. And so anytime you have an issuer that has a sizable audience to start with, as Ellio did, those companies, those issuers are always going to be more protected and more likely to succeed when they go down the Reg A Plus path.
Definitely, and actually, we have a clip here from a recent webinar where Jason Paltritz, Managing Director of OTC Markets Group, Inc., said that Ellio set a great example for the crowdfunding process.
I will say, Ellio, we probably couldn't have asked for a better first company. Ellio was crowdfunding, I think, before it was crowdfunding, only because of the nature of their business and the fact that they were taking pre-orders for their cars on the internet. So in essence, they were using the internet to kind of create demand for the car that they want to build. And because of that, it was very easy once Reg A Plus and the ability to raise money on the internet kind of came into effect for them to use what they had done there and just transfer that. Ellio, by nature of their product, had a lot of very interested people, had a lot of people that believed in the Paul Ellio story, that believed in Paul Ellio himself, and the natural extension of that when they were making their equity available was to participate in that offering.
Ellio is a great example of that. Consumer products company, consumer-facing businesses, B2C companies. Investors want to put money into the companies whose products or services they use, and they want to put money into the companies who have entrepreneurs leading them that have the same worldview as they do. And I think to Jason's point, at OTC Markets, Paul Ellio is a man with a vision, and a very compelling vision. And so when we created the video for this campaign, we knew that we needed to have Paul Ellio looking the audience in the eye, making that personal plea. And we brought in a very talented video production team, Benji Bakshi, who's a Hollywood cinematographer, has worked on $100 million productions to help deliver that message. And one of the strategies in general from a storytelling perspective is issuers need to consider how they can communicate and deliver a message to prospective investors that fundamentally transcends their business, their core products or services. And that was the approach we took with Ellio, and I think it worked really well.
Absolutely. And I really enjoyed a lot of things you talked about, the importance of storytelling, and you do need to do video there. And one of the things you said, it's not, I think you said a little bit more about it's not exactly the what, but more of the why you're doing that. Can you maybe talk about that a little bit on how companies should position themselves?
Sure. So there's this famous Simon Sinek TED Talk that I had seen and was inspired by a couple of months to engaging with Elio Motors. And you can Google it, it's on YouTube, it's worth 15 minutes. The essence of the talk is he says, people don't care about what you do, they care about why you do it. And again, this goes to the heart of the importance of storytelling for Reg A equity crowdfunding. It is probably the most overlooked aspect of these campaigns. We've seen issuers launch without videos. What a terrible way to launch a crowdfunding campaign trying to raise millions of dollars without a high quality video. And these are things we know from our days of marketing, Kickstarter and Indiegogo campaigns. But you have to have a very compelling story, and you really need to sell the why. And so the idea is, if you have a business that has a strong why, it really needs to come out in the video. And what you're trying to do is make a strong emotional connection with your customers, fans, and ultimately new constituents, the people that are going to invest in the deal. This is not about hyping the benefits of your product, your service, feature, function. This is about your vision, your mission, and your values. And you need to have an authentic voice. Generally, the CEO of the company needs to be looking the camera in the eye, like Paul Ellio, making that pitch. And that one-on-one emotional connection is really what the issuer should be aiming for in these campaigns.
What type of a typical budget are people looking at when they're doing these type of marketing campaigns that they should expect for something?
Look, the budget's going to vary. It's oftentimes a factor of how much capital the issuer is looking to raise. I can tell you very straightforwardly that our typical budget for a Reg A Plus campaign is about $150,000. We have a team of experts, digital marketing, crowdfunding experts. We assign to each campaign. We charge $30,000 a month for services. So a 3-month project is $90,000. Video production budget is about $20,000 on average. Again, you need a high quality, compelling video. And then our typical paid media budget is about $40,000. So, look, I think a lot of people hear that number and are shocked, but realistically, you're not going to raise $15 or $20 million on a shoestring budget. So there's a lot of misinformation and misunderstanding out there in the market about how these campaigns work. And fundamentally, we think of equity crowdfunding very plainly as a combination of storytelling and digital marketing. So if you're going to spend money in your Reg A campaign, yes, you need your crowdfunding attorney. Yes, you need a competent CPA to help you put your 2 years of audited financials together. But if you're going to spend more money on the legal and accounting than you are in the marketing, you've got it backwards. So from our standpoint, the marketing is what makes the campaign work. It is the storytelling. It is the distribution of that message to the right target audience that's going to raise you capital. And so therefore, you're trying to minimize your legal and accounting fees ultimately, and put the majority of that budget into marketing so that the deal is distributed appropriately and you're in a likely position to succeed.
That's great insight, and I think companies definitely need to listen to that message and loud and clear there. So it's so important there. And also when you talk about doing this marketing, who's the audience? How are you getting to the right people and targeting them?
So it's a great question. And the truth is that we make educated guesses about who we think the likely investors are for any deal. So nobody knows, nobody knew going into the Elio Motors campaign who the investors were going to be. But we made educated guesses. We figured, look, the people that have already put down $100 to $1,000 to buy a ticket in line, waiting for this company to go into production, that is likely the most obvious investor in the deal. And certainly, that was a correct assumption. But beyond that, we're making educated guesses about who we think the likely investors are based on the industry, the company's products, services. And then at the end of the day, these are very dynamic campaigns, meaning that as we get data based on investors, based on people buying shares or reserving shares, we can then act on that data. So it's very much actionable data. Once the campaign is live, we can start to create lookalike audiences using Facebook. We can start to figure out the demographics, the taste profiles of the people who are investing. And once we have that real actual campaign data, we as a partner to the issuer are in a great position to make adjustments, tweak the knob, so to speak. And so that's basically the process: is we make educated guesses and then we refine and optimize based on real-time results.
And you make it seem as, it's almost easy, but that's why you need to hire a company like you, because it's definitely not easy to do those things and to be effective doing it. So I know you're extremely busy and you've probably got a very good team around you doing that. You've obviously had a lot of success there. Obviously, with all the new introduction of Reg A Plus, you've really taken advantage of that, and you focused specifically on Reg A Plus. Not 506Cs, your Title II type thing. What's the reason you're focusing on Reg A Plus?
The beauty of Reg A Plus is that the issuer or companies like CrowdfundX are legally able to solicit unaccredited investors. And the number of unaccredited investors out there is enormous. And if you do the math very quickly, you can see why there are a number of very well-respected studies that estimate equity crowdfunding could overtake venture capital dollars over the next 5 years. This is basically what's going to happen. There are 240 million unaccredited people in the United States. So that gives us an endless supply of prospective investors. It's also at the same time the big challenge for the issuer. If there are so many prospective investors, how do you focus your time, energy, and limited marketing dollars on the people who are most likely to invest? And that certainly is where we come into play. And by the way, this is not just the United States. Anyone over 18 globally is a prospective investor in your business if you follow the procedures and you file and submit a Form 1A and you're authorized by the SEC. So that's really why we have planted our stake in the ground in this space. We see Reg A as an incredible opportunity. And I want to make a quick comment here. I've had a number of meetings out in New York recently, and some of there's this idea, I think, with some entrepreneurs and tech folks that the technology is totally disruptive and it's going to displace people on Wall Street and it's going to rid of investment banks. I don't think that's the case. I think ultimately what you're going to see in this industry is that the most successful equity crowdfunded deals are going to utilize a hybrid approach, meaning there's going to be a foundational direct-to-consumer digital marketing play, but that's going to be supplemented by an investment bank and a selling group and broker-dealers. And so I think that's how you get to $50 million. And ultimately, some company out there will raise $50 million. It's not a question of when or if, it's a question of how. And so from our perspective, we see the technology. Let's use equity crowdfunding platforms. We see the platforms as an accelerant to raising capital, but not a total or true replacement for some of the traditional tried and true capital markets players and infrastructure. We see a hybrid approach ultimately being the future of securities marketing.
That's a very interesting comment. I think it's very important. I mean, you still need some of the personal touch and the personal meetings, but yes, it is definitely helping to accelerate, I think, and reach a lot more people and expand that reach. What were some of the challenges you had with Elio Motors marketing it?
Look, I mean, Elio Motors was a dream client, and the truth is that we were at the right place at the right time. At the same time, I think it's fair to say we earned it. I've had this company for 6 years. We had marketed 80 crowdfunding campaigns to get that introduction to Paul Ellio. So I like to believe that, luck is the intersection of persistence and opportunity. So you could say we were lucky to get that introduction, but we also earned it. I think from what were the challenges? Challenge for us was that we had 19 days to launch that campaign. We signed a contract with Elio Motors on May 30th, and we launched the campaign, I believe, on June 1st. And they were determined to go live on June 19th, 2015, the day that Reg A became legal in the United States. It was literally the fastest campaign we've ever turned around. And I would not ever in another lifetime want to do it again that quickly. Sleepless nights, everyone on our team overperformed. And from that standpoint, it was interesting. We learned that when our company has a shorter runway to a launch, we generally outperform versus when we have a 4-month ramp up, 4-month runway. It's hard to gain momentum or urgency. So ironically, the short runway, although it was very aggressive and brutal and challenging, it ended up being exactly what this campaign required for success. And it resulted in an incredible digital marketing, paid marketing plan, influencer marketing plan. It all came together the right way.
Absolutely. What an amazing job you all did there. And when you do those types of things, we talk about influencer campaigns and things like that. Not everyone's maybe familiar with some of those important things. What's an influencer?
Sure. So we think of influencer as someone on social media that has an authentic, engaged, built-in audience. And let's take it back a step. So equity crowdfunding, by definition, is the sale. It's the online offering of securities. The key word being online. So the question for an issuer, let's say a company that doesn't have the fan base that Elio Motors did, doesn't have the pre-orders, may not even have customers. How does a company like that reach people online in general? Well, one of the strategies we employ is influencer marketing. And so with Ellio, we actually identified 15 YouTubers who we would call influencers that each had about 50,000 subscribers or more to their channels. And we flew them out to Los Angeles and gave them a once-in-a-lifetime opportunity to test drive the Elio Motors P4 prototype. They got to interview Paul, look under the hood, and ultimately they go back and edit videos and publish content. And we had them sign an embargo agreement where they would not publish the content until the day the campaign launched, and that they would link to the campaign page. So, the real question, I think, or the value of influencer marketing for a lot of issuers is it gives the issuer an ability to propagate or distribute their message to an audience that's already built and owned by one person. So then the challenge is, how do you identify those people that are ultimately going to be, good representatives and brand ambassadors for your company? And how do you identify, communicate, incentivize them to basically deliver the message for you? And we've had a lot of success doing that with Ellio and other campaigns as well.
Well, what a great strategy. Rather than trying to find them one by one, you find the people that have the following already and get them on there. Just to kind of switch gears a little bit, when we come to investors and people that want to take part, what do they need to be aware of? What do they need to look out for or really understand before they take action?
I think the first thing that unaccrediteds and investors in general need to be aware of is that, by definition, most of these campaigns are high risk. These are high risk, high reward campaigns. You're investing in companies that may be very young, early stage companies. They may or may not have revenues. They may or may not have operating cash. They may have limited runways, and therefore they're risky bets, period. So that's the first thing to realize. And therefore, one of the ways for investors to mitigate that risk is to diversify their investments. And we're not investment advisors, so we can't tell people how to spend their money or invest their money. But I think a good investment advisor would tell somebody to diversify their portfolio and maybe suggest that if you've got $100,000 in retirement, maybe don't put more than 5 or 10% into equity crowdfunding offerings. And by the way, if you're going to do that, if you decide to put 10% of your retirement into equity crowdfunding offerings, you're probably better off putting $500 into 20 deals than you are putting $10,000 into one. So recognizing that these are inherently risky investments, one, and two, to mitigate that by not betting the farm on any of these companies, and secondly, by diversifying, or thirdly, by diversifying.
Great comment I think you make there. Also, for people who haven't participated in this before, when I invest, what do I get? I mean, do I get stock? What's my liquidity look like? Is there a holding period? What am I looking at here?
So, it's a great question. I think for the Reg A deals, in theory, the shares are immediately tradable, although there's not a secondary market that has yet developed. Although you're going to see in the next 12 months a number of companies, players, platforms come in and offer secondary markets where in theory you will be able to trade these shares. In terms of, what do you get? Ultimately, it's up to the issuer and their counsel to determine how they structure the offering. Are they selling equity? Are they selling debt? You don't have to do an equity offering like Ellio did. Some companies can offer debt. In fact, I think there's even platforms out there that are totally dedicated to debt offerings. And then in terms of what you do with those shares, let's say for equity deals, once the campaign's closed, that will depend on the development of secondary markets. It also depends on the post-Reg A strategy for the issuer. So with Elio Motors, as we know, they decided to go to the OTCQX. And therefore, any one of the roughly 6,200 investors who bought stock in the crowdfunding offering could literally double their money right now if they were to sell their shares. I think the stock is trading at $20 a share. The crowdfunding offer was $12 a share. So it's really this unique scenario where previously, if Ellio had done a typical traditional IPO, that money would have been raised from pension funds, hedge funds, family offices, high net worth. The crowd doesn't have an opportunity usually to get in on those deals. Yet here we had thousands of people who were able to take advantage of the crowdfunding offer on StartEngine. And my sense is a lot of these people are waiting for the company to do more. This is a company that needs to go into production. I think they need to raise more money to do it. But in theory, when they get there, those shares could be very valuable. So a lot of people, including myself, are holding on to them.
Absolutely. You mentioned StartEngine. When companies are looking to engage in these types of offerings, there's tons of crowdfunding platforms, portals. How did you decide to go with StartEngine over some of the other ones out there? And how do you vet them out when you decide?
So initially for Ellio, they had actually wanted to go down a different path, and they were talking with a platform that I wasn't totally confident about at the time. And I had been in touch with Ron Miller, who's the CEO of StartEngine. I had brought him on to speak at a panel, at a digital Hollywood panel in LA. I knew that he was making a big bet as a platform in the equity crowdfunding space. I also knew that StartEngine, prior to becoming an equity crowdfunding platform, had a really great track record investing in tech companies here in LA. StartEngine was previously an accelerator, and I think they were the largest technology accelerator in Los Angeles. They had invested in 60 companies. So, my sales pitch to Paul was, hey, look, you've got to meet the guys at StartEngine. These guys understand technology because they've invested in 60 companies. Startups are going to them asking how to build a platform, how to build an app, how to acquire customers at low or no cost. And I think ultimately it was the right recommendation that we gave to Ellio and the right decision for Ellio and their team to choose StartEngine as the platform. Looking forward, now there are a number of other platforms in the space. We really enjoy the relationship we have with StartEngine. We also work with Seed Invest. We work with W.R. Hambert & Co. We work with Bank and the TriPoint team out in Manhattan. And I think it's a real important decision ultimately, and not necessarily black and white. So that's another role that we can, in theory, play in these deals, is help the issuer assess the platforms and determine which platform is ultimately going to be best suited to them. By the way, sometimes the answer is none of the above. So there are companies like Fund America that have an Invest Now API, meaning you may not need to run your Reg A Plus campaign on any equity crowdfunding platform. In fact, the next company like Elio Motors likely doesn't need a platform. They can use a white label solution or something like what Fund America offers, or there's a company, CrowdEngine. They have a white label solution as well. So assessing the platforms is really important, and oftentimes we will create a short list of 3 and encourage the issuer to do their own due diligence and potentially make a recommendation based on our experience.
That's very interesting. I had no idea you could do that. I thought you had to use one of these specific platforms or portals for that, but that's interesting. They can do a white label there.
Correct.
So, you've been so successful. I'm sure you're really busy. I'm sure there's companies probably beating down your door now to work with you. How do you decide which companies you want to work with and kind of go forward?
Look, we just did an exercise internally last week, and we talk with at least 5 to 10 issuers every week. And we're honored and fortunate to be in that position. At the same time, not every company is going to be a good fit for these campaigns. And sometimes they may be a great fit for equity crowdfunding. We may not be a fit for them. These are all possibilities. We are generally trying to work with a very precise type of business. Based on our experience in the last 12 months, companies we've worked with have seen successful based on other companies that are having success we haven't worked with, but we know are successful. We've created what we are calling an ideal customer profile, and I'll share it with you. It's very new, but I think it's pertinent. So the ideal company for a Reg A Plus campaign is going to be a company that has raised at least $3 million, is doing about $2 million in annual sales, or has about $2 million in pre-orders, has at least 5,000 customers, has at least 10,000 social media fans, has at least 1 physical location, at least 10 employees, and even better, they have an SEC attorney engaged. So that would be a great customer. And if we had to choose the factors that are weighted more heavily than others, which we do, I think the most important three are how much capital has been raised, what's their annual revenue, and how many customers does the company have. So, there will be exceptions, but bottom line, this is generally not a great fit for pre-revenue startups, pre-product companies. Don't kid yourself. You're not going to file a 1A and magically raise $50 million because you think you can. No, there are certain types of companies that are going to inherently have advantages. And the characteristics I just shared might give you an indication as to whether you're a good fit for this type of campaign or not.
Absolutely. I think that's a great point. The whole build it and they come thing just really doesn't happen all the time. And I do have that experience with a lot of people thinking, well, just as soon as someone finds out about it, we're off to the races. But you do need that marketing. You do need to already prove that you're doing some good things out there. So completely understand that. If companies want to learn more about your services, where do they go to get in contact with you and learn more about CrowdfundX?
They can go to crowdfundx.io, or they can also email me, Darren, D-A-R-R-E-N, at crowdfundx.io. And we're happy to talk with anyone who's thinking about these campaigns. And ultimately, part of my goal is to continue to provide as much awareness and education as I can. I think the industry needs transparency. We turn down a lot of business, but we're happy to talk with people and provide honest feedback as to whether we think they can be successful going down this path with or without our help. And ultimately, it's about the ecosystem. The industry needs to see more companies succeed, for us to do well, for StartEngine to do well. So that's kind of my interest. That's how you can get in contact with us.
Well, a great problem to have. A lot of clients looking to work with you. It looks like we're out of time for now, but we want to thank our guest, CrowdfundX CEO Darren Marble, for being on the program. Darren, we look forward to having you on again soon. It was a pleasure.
Thanks. Thank you so much for your time. We appreciate it.
Hey, tomorrow, be sure to watch our exclusive interview with President and CEO of Itronix Incorporated, Dr. John Whitney. He's discussing the company and its flagship clean tech product. Catch more webcasts and videos on investortownhall.com. Tune in next time, and we'll see you then. Stay tuned for the next interviews here on investortownhall.com. Also, make sure to join a stock board to start the discussion and get your voice heard. Investor Town Hall connects investors and companies building trust and transparency in both public and private companies. This is your chance to get your voice heard on our platform and share information with investors just like you. From equity crowdfunding, Regulation A+, to emerging growth companies, we are on the front lines in capital formation and entrepreneurship. Find out how the average Joe can get skin in the game. We put leading industry professionals front and center, giving you access to years of knowledge and expertise. Join the conversation on investortownhall.com and sign up for your free account today.